you think that your regulated broker is giving you decent spreads of under 1 pip, at most 2 pips. But what if I was to tell you that you are wrong? They are giving you between 100 to 200 points on a regular basis. Hi traders, if you're new here, I am Lisa Forex, an algorithmic trader, and today we are going to investigate real brokers and real data behind the scenes on what they are actually giving you in terms of spreads. Now, I'm not making this up. I'm going to show you exactly how you can do it yourself so you can investigate your own broker. And the platform I am going to use today is MetaTrader 5. They also have an older version called MetaTrader 4, but MetaTrader 4 unfortunately doesn't store spread information. So MetaTrader 5 is much better in terms of backtesting because they actually do contain historical spreads for your specific broker. And the broker I've chosen to do this analysis today is IC Markets because they are a popular broker worldwide. So I don't intend to hate on IC Markets. That is not my intention. I do actually trade with them live, so hopefully they won't sue me for making this video. So to be fair, I will showcase other brokers at the end of the video so you can see a fair comparison across different brokers. So the first step is to actually get and source the data. On my screen here, I've got my IC Markets MetaTrader 5 terminal, and under the market watch, you can see I've got a whole bunch of symbols. Let's pick one. I'm going to pick the Euro USD on purpose because that one is one of the most common and popular symbols. So I'm going to right click and select symbols. A little pop-up box will appear, and you can see here under the specification tab, I have selected Euro USD. Head over to the next tab, bars, while ensuring the Euro USD is still selected. And now in the next window, keep it as M1 because we want the most accurate data that we can get, and choose the data range that you want to select the data for and hit the request button. Sometimes this doesn't work, so you have to hit it a couple of times. Now you can see you've just requested and downloaded all the data into your MetaTrader terminal for the open, high, low, close, tick volume, and what we're looking for is the spread. So this will give you the spread every single hour. It looks pretty good, doesn't it? It's telling you, there's not much spread happening. But if you scroll all the way down, and you can see it does change. Sometimes you have 1 spread, sometimes you have 2 spread, sometimes you have 25 spread. So what I'm going to do now, and you can follow along and do this in your MetaTrader terminal as well, is hit the export bars. This is something I've prepared previously. You can see I've already gone ahead and exported all the 1-minute bars for the past bunch of years for a variety of different symbols. And you can see here, I did this on the 16th of January 2025, and about 15 years of data takes up about half a gig. So just be wary of that if you want to export large amounts of data. And if we open it up in Excel, whoops, looks like this file is too big for Excel to read. So I'm going to open it in text editor instead. And this is what the contents of the file looks like. What we are really interested in is the spread. So remember that this is in points. So back in January the 1st, 2003, the spread was 50 points, which is equivalent to 5 pips. In the next few steps, I'm going to show you them using a tool called Tableau. And this is basically a fancy version of Excel where you can take the raw data and make it interactive in a fancy chart. You don't actually need the Tableau software because it is expensive. I only use it because before this, I used to be a data scientist and I'm quite familiar and I quite like the interface of Tableau. But you can do exactly the same thing with Excel. Just make sure you don't download such large amounts of data. You can achieve exactly the same thing in pivot tables. And this is what Tableau looks like. Don't worry about if you don't know what you're looking at. I will explain everything in detail. So I've gone and grabbed all those Excel spreadsheets and I've loaded up just the Euro USD IC Markets average spread. So here on this axis, I've got the average spread, and at the bottom here, I've got the years. So you can see back way back in 2003, the average spread over that year was about 50 points or 5 pips. Whereas if you look closer to today, is 2025, you can see the average spread is 1.23 points, which is very tiny. So you might think, based on this chart alone, that, hey, our trading conditions have improved. Our average spread is much smaller. But that is what they want you to think. Here is a different view of the exact same data. So each point, each circle here is 1 minute and the spread that was applied on that one specific minute. So on the left, I've got Monday, Tuesday, Wednesday, Thursday, Friday, and I've got the 24 hours per day. So we can see exactly for each hour how much manipulation there is in IC markets. And at the top on the right here, I've got a date filter from 2003 to 2025. From a quick overview glance, you can see there is a huge variance in the spreads. So on average, the spread is actually about 50 points, so 5 points. But then now we're looking at data all the way from 2003. So let's reduce the filter range. So now we're looking about 2003 to 2007. We can see it's pretty consistent between these few years. There's a whole bunch of spreads at 20 points, 30, 40, and 50 points from 2003 to 2007. So the spread back though in those years was very stable. When you traded a particular strategy, you knew you were going to get between 20 to 50 points. Now let's move this slider so we have a few more years to look at. Now we're looking at 2009 to 2013, and now we're already starting to see worse spreads. So there's much more variety. We do have some smaller spreads, about 4 points, but now we're starting to see bigger spreads at about 100 points, which is about 10 pips. And we do see an outlier here of 360 pips, but most of the time overall the spreads are still between 0 and 40 to 50 points. Let's change this slider again so we're going to see more recent data. And now notice that we're seeing more occurrences of larger and larger spread. Here now we're looking at 200 points, and it's becoming more and more regular. So let's go to just a few years ago, and now you can definitely see a pattern. From 2018 to 2021, notice the first hour of the day. Generally speaking, these spreads are pretty horrible. In the first hour of the day, we're seeing about 200 points spread across most of the week. Monday seems to be the worst. And then you've got Tuesday, Wednesday, Thursday, and Friday with a lot of large spreads also in the last couple of hours of the day across both Thursday and Friday. Lastly, let's change this data just to the past few years, and we can see there is a huge variance in spreads still continuing to this day. Mostly in the first hour of the day, you can see variances of up to 250 points, consistent across Monday, Tuesday, Wednesday, Thursday, and Friday. And Friday here is the most times where you will see the most manipulation. The other days of the week are fairly okay in terms of the spread, apart from the first hour of the day. Friday, there is so much more spread, slippage, whatever you want to call it. Let's see, we've got here 68 points. And this is not just happening one time. This is happening consistently over multiple days over the past few years. So for IC markets, we saw back many 20 years ago, the spreads were much bigger, but they were much more stable. And now you can see the spreads are much more volatile. There is a much wider range of spreads, especially on a Friday, especially in the first hour of the day, and especially in the last few hours of the day as well. This is on IC markets. You might think to yourself, you know what? I don't trade on IC markets. I trade on a totally different broker. I don't care. Let me show you a few other brokers. The next broker we are going to look at is Ox Securities. And I've already gone ahead and downloaded all the data from 2022 to 2025. The reason I didn't want to download all the data because my PC is running out of memory and I do have to clean it up. So that's why we only have data for 2022 to 2025. And you can see quite a big difference within this broker. So you can see here that the average spread is much smaller. There's not a lot of noise in between here, especially on a Friday, not too much noise. There is the standard huge spreads early in the morning in the first hour of the day. So we see here 140 spread, a 296 spread, but remember each point here is just one dot. We want to see overall what the overall spread is like. So we can see a whole bunch of spreads here that are ranging between 20 to 200 pips on a Monday, consistent across Tuesday, Wednesday, Thursday, and Friday. But apart from that, it's not too bad on a Friday in terms of spread widening. The next broker is going to be Go Markets. For Go Markets, again, I am just exporting data from 2022 to 2025, and you can see here it is very consistent across the different time frames. There is huge spreads across the first hour of the day, and we're seeing a maximum of 150 over the past few years, and there is some big spreads also in the last hour of the day between after 8 o'clock. You can see on Tuesday has not been that great, and on Friday has not been that great for Go Markets as well. And the last broker we are going to look at is Darwin-X. With Darwin-X, I could only get data from October 2024 till today, 2025. There wasn't any more data available for download in MetaTrader, which you'll see consistent across many other brokers. So with Darwin-X, I am seeing consistency. The first hour of the day is generally the spreads are not that good, ranging up to about 100 on Tuesdays. In the past couple of months, Tuesday evenings has not been that good in terms of after say, 8 o'clock, the spreads can be wide. Apart from that, there is a minimal spread manipulation on a Friday, which we've seen with IC markets. And the spreads are fairly consistent across every single day of the week, Monday to Friday, excluding the first hour of the day where you shouldn't be trading anyway. And on Tuesday, the last couple of hours has not been that great. The rest of the time during the day itself, the spreads are under 5 points, which is half a pip, which is pretty good. And notice on Friday, there's not much. There's actually no manipulation that I can see using this data. And Darwin-X are also the sponsor of today's video. And Darwin-X are different to other brokers because they have a different business model. Most other brokers are B-book brokers, and their business model relies on getting new people, new traders in and blowing their accounts. Because in a B-book model brokerage, they don't actually send your trade off to the market. What they do is they take the opposite side of your trades, which is a profitable business model, especially when most traders lose. So if they take the opposite side of your trades and when you lose or blow out your account, then that's when they will make money. To increase the odds in their favor so that you will lose more money over the short term is why they will increase their spreads over to 100, 200 points, as you've seen in the data. The reason Darwin-X have a different business model than most other brokers is because this is just part of their company. The other half of the company is Darwin-X Zero, and the whole point of Darwin-X Zero and the entire Darwin-X ecosystem is to attract good traders and reward those good traders with allocation, get investors in, so everyone benefits. The trader benefits from getting money and allocation from Darwin-X. Investors without the trading skill can invest in good traders with a long-term track record. So it doesn't make sense for Darwin-X to manipulate any spreads and widen them randomly on different days of the week, because then that will hurt the Darwin-X Zero business side. I've personally been trading on Darwin-X, the broker, and Darwin-X Zero, the asset management platform, for the past year and a half. I've made it through all the different stages that they have. The initial calibration stage where Darwin-X are just trying to find out what your risk level is as a trader, then getting over to silver where I've got a total of I think 150 or more different allocations with a record of about 5 consecutive months receiving allocation from Darwin-X Silver. And finally, I have made it to Darwinia Gold and attracted investor capital and received multiple payouts from Darwin-X. So you have three options here. The first one is you can use Darwinex as a normal MetaTrader 4 or MetaTrader 5 broker. The second option is you can use Darwinex as a platform and go into the Darwinia ecosystem where you can benefit from getting allocation, which is pretty much free money from Darwinex, because in this route there is absolutely no fees at all. It's literally free money. And the last option is using Darwinia Zero, which does have a monthly subscription cost, but this model means you can trade a simulated 100k accounts because some strategies do require larger amounts of capital. I will post a link below to both Darwinex, the broker, and Darwinex Zero, where you can get an additional discount with the code Lisa. And if you thought this video was super useful, then I have another video for you right here to talk about the impact leverage has on your trading account. Thanks for watching. Bye.